Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for this segment, we have Ryan McCormack, Factor and Core Equity Strategist at Invesco, to discuss weekly performance in the Nasdaq-100. We'll also take a look at a stock who doesn't get the mentions like the Mag 7, but deserves to be within that mix. Ryan, it's great to see you as always. Welcome back to Trade Talks, and let's get a brief overview of what stood out in terms of action over the past week in the Nasdaq-100.
Sure. Thanks, Jill, and great to be back. It was a really solid week for stocks with QQQM and QQQ up 3.36 and 3.35% respectively. That outperformed the S&P 500 up 2.52% and the S&P 500 Value Index, which was up about 3.28%. From an economics perspective, attention was on prices in the Fed. So on Tuesday, the 12th, the November CPI report actually was rather lackluster. Readings were roughly in line with economists' expectations. Equities rallied. We saw the Nasdaq-100 move upward by about 80 basis points. But Wednesday, the 13th, was really the big move in the Nasdaq-100. We saw the index move upwards of 1.25%. First, we saw November producer prices come in lower than expectations and showed kind of this continued downtrend of prices paid. But everybody was sort of holding their breath for Wednesday, the 13th. It was the conclusion of the last Fed meeting for 2023. And unsurprisingly, the FOMC held rates steady at 5.25% to 5.5%. The real focal point of the meeting and the press conference seemed to be that the Fed referenced easing inflation. It lowered its forecast for 2024. And then additionally, the central bank indicated that we could see 3 rate cuts in 2024. So on that news, we saw equities rally. We saw rates drop pretty considerably. Yield on the 2-year, fell by over 30 basis points, and the yield on the 10-year fell by over 18 basis points. And as we look today, according to Fed Funds futures, market participants are expecting roughly a 76% chance of a rate cut by the Fed's second meeting of 2024, which is in March. So again, you see kind of the Fed easing off the restrictive policy. We're starting to see rates move downwards, and the potential of this soft landing coming into shape.
And Ryan, if we isolate it to weekly performance, what sectors really contributed to the outperformance this week?
Yeah, pretty broad-based performance. All sectors in QQQ and the Nasdaq-100 were in positive territory. All sectors except for one in the S&P 500 were in positive territory. Healthcare was a pretty big source of relative outperformance, despite the sector being a relative underweight by over 6 percentage points to the S&P. It was the second best performing sector in QQQ, and it outperformed its counterpart in the S&P 500 by nearly 4 percentage points. Technology was the largest source of relative outperformance against the S&P 500. It was carrying about a 21.5% overweight, and we saw outperformance of over 1.5%. And that was really led by Broadcom, which is a QQQ overweight relative to the S&P 500. That stock was up over 19.6%.
And if we take a look at Broadcom, right, Ryan, we hear about the Magnificent Seven, but if you look at the year-to-date performance there, that deserves a mention as well.
I mean, without a doubt, year to date, the company is up almost 106%, and that's through Friday's close. Last week, up almost 20%, and a 9% advance on Monday alone. It's the 7th largest contributor to absolute performance for the Nasdaq-100 for the year, and also the 7th largest contributor of relative performance against the S&P 500 for the year. For the year, it's averaged roughly a 1.6 percentage point overweight relative to the S&P 500 index. So, kind of outside of the Magnificent Seven, you don't really get the same level of fanfare. But according to statistics, Broadcom maybe should be the 7th of the Magnificent Seven. Over the past week and a half, we saw the company report Q4 earnings on December 7th, EPS and revenue that beat analyst expectations. The company was very optimistic about the growth of AI-powered demand and noted that revenue to semiconductors that support AI functionality make up about 15% of total sales today. That number is going to surpass 25% in 2024. Then on Monday, Citi reinstated coverage on the name with a buy rating, was constructive both on that AI demand as well as the VMware acquisition that was completed in November, and noted that it could be EPS accretive by fiscal year 2025. So again, a name that maybe we don't talk about as much as the Magnificent Seven, but one that is contributing right alongside it, and one of these kind of overweight Nasdaq 100 names that certainly powers performance as we look throughout 2023. And then one thing I'll just touch on is the annual reconstitution, which was effective this morning before the open. We saw 6 new names enter the Nasdaq 100 index, 3 of which are graduates from the Nasdaq Next Generation Index. We saw 1 re-entry from the Nasdaq Next Generation Index after previously being a member. So we saw Coca-Cola Euro-Pacific Partners, CDW Corp, and MongoDB entered from the Nasdaq Next Generation Index. That re-entry would be Splunk. So Splunk was previously in the Nasdaq 100 from 2019 through 2022. Last year, it moved down into the Nasdaq Next Generation Index, and then this year, it's graduating yet again from the Nasdaq Next Gen into Nasdaq 100. And then we saw 2 change in listings. So we saw DoorDash, which changed its listing from the New York Stock Exchange to Nasdaq back in September, and Roper Technologies, which did the same in July of 2023. And then the Nasdaq 100 is going to get an additional member, also effective today, but the action is not a part of the annual reconstitution. After it was announced that CGen was acquired by Pfizer last week, Take-Two Interactive is going to be added to the Nasdaq 100. And you may be seeing a trend here. Take-Two joins the Nasdaq 100 from the Nasdaq Next Generation Index and was also previously in the Nasdaq 100 from December 2017 through December 2019.
Ryan, is there a trade around additions and deletions? What does it mean for a company? Does it mean anything for investors? If we own the QQQ ETF, is there anything we need to be aware of? We're making any changes in our account? Does it mean anything for us?
Well, I think when you're looking at something like QQQ or QQQM that tracks the Nasdaq 100, that's what it's designed to do. So, right, all of these changes will be effective within the ETF the day that it changes within the index. Those that utilize QQQJ, which is an ETF that tracks the Nasdaq Next Generation Index, you'll see some of those changes happen in real time, right? So if you hold QQQJ, those names that are moving up from the Nasdaq Next Generation Index, you've held in that ETF, but now as they move to the Nasdaq 100, they'll be out of that ETF and picked up by QQQ and QQQM. So that's sort of, in using those strategies in tandem, it ensures that you have exposure to these names throughout any sort of changes, but ultimately the ETFs themselves will reflect any changes within the index as they happen.
All right, Ryan, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.